Well, good morning. Yes, it's me, Kenny Polcari, your host of the party, and here I am coming to you live from the floor of the New York Stock Exchange. Today is Monday, November 11th. It is Veterans Day, so it's going to be a relatively quiet day because the banks and the brokers, the banks and the bond market is closed, yet the equity market is open. In any event, here are the things that you need to know to get your day started. Well, the S&P busted up and through 6,000 on Friday afternoon. The SMIDs are now up 19% year to date. Bonds stage a small rally after the beating they've taken since September, right? Yields decline just a tiny bit. Gold and oil are under a bit of pressure as the dollar continues to rally. And what do we have for dinner tonight? Well, this is Thanksgiving, right? So we're going to have the roasted Thanksgiving turkey. Get ready, because then we're going to get all the vegetables and the side dishes coming in the days ahead. In any event, stocks continue to rally, closing out another just blockbuster week, driven by better eco data, the ongoing better than expected earnings, the Fed rate cut, a falling VIX, and the idea that the Trump's pro-growth policies will support a stronger economy and strong corporate profits into next year and the years ahead. More than $20 billion has flowed into stocks in the days after the election, and that has fired up a rally not to be believed. The Dow added another 260 points, or 0.6%. The S&P gained 28 points, or 0.5%. The Nasdaq up 18 points, or just 0.1%. The Russell up 17 points, or 0.7%. The transports gained 144 points, or 0.8, while the equal-weighted S&P added 40 points, or 0.5%. Now, a funny thing happened on the way to the forum. Recall what I said to you on Wednesday morning when the futures were screaming higher post the election results. And I said, and I quote, the S&P closed at 5732, up 70 points on Tuesday evening. And this, if futures are any indication of what's about to happen next, we can expect the S&P to open up 130 points higher, taking us yet into another new century, 5,900. Recall that most estimates are calling for the S&P to be 6,000, 6,200 by year end. If the excitement continues, we should hit 6,000 by the end of the week. And that is exactly what happened. The S&P blasted up and through 5,900 in just 3 days, and then right into another new century, 6,000 at 2:58 p.m. on Friday afternoon, trading as high as 6,012 before settling in just below the century mark. SMIDs, right, the Russell small and mid caps, which had been up 10% year to date going into the election, have now been the biggest beneficiaries and out 19% year to date. So they gained 9% last week, surpassing the Dow Industrials that are up 16% year to date, leaving it just behind the Nasdaq, which is up 28.5%, and the S&P, which is up 25% year to date. The move being credited to what is expected to be lower rates, less regulation, although Kenny Polcari just poo-pooed that idea, we'll get that to it in a minute, and protectionist policies, think tariffs, by the new Trump administration. In any event, it was an amazing week for stocks and investors, but no one should be surprised if we get a brief pause over the next couple of weeks ahead of what could be another year-end surge, right? Sector performance of the 11 S&P sectors saw utilities in the lead, up 1.9% on Friday. The strength in utilities this year is up 25% year to date, is more about AI and data center demand for energy, for electricity, than anything else, right? Real estate's up 1.7%, consumer discretionary up 1.4%. Consumer staples added 1.2%. Industrials up 1.1%. Financials up 0.9%. Healthcare up 0.7%, and energy up 0.7%. We also saw strength in energy exploration and production. The XOP up 0.7%. The triple levered S&P long ETF, the SPXL, gained 1.2%. Disruptive tech, ARC, was up 2.6%. Aerospace and defense, the XAR, gained a whopping 3.5%, taking it up 24.5% year to date. And this speaks volumes about what we can expect. Names like LMT, Raytheon, and Curtiss-Wright are all up better than 2.5% on Friday. Now, all the gains don't mean that there weren't any pockets of weakness, because they were. Tech lost 0.1%, communications lost 0.5%, basic materials lost 0.9%. We saw semis under pressure. The SOX was down 0.7%, cybersecurity was down 0.1%, and metals and miners were down 4%, and the list goes on. Bonds had a good couple of days after getting slammed in the weeks following JJ's September jumbo rate cut. The TLT gained 1.3% on Friday, taking it up 3.8% in 3 days since Wednesday, right? The TLH was up 0.9 on Friday, gaining 2.7% since Wednesday. The 2-year ended the week yielding 4.25%, down from 4.3, while the 10-year ended the week yielding 4.3, down from 4.46. The higher yields are doing little to cause investor angst as we see stocks continue to rally, because in the bigger scheme of things, they're not usurious just yet. In fact, it would be difficult to say that they're anywhere near usurious. But if all you know is 0% rates, then yes, it does look expensive. But let's be honest, the market recognizes that 4.3% 10-year rates are not a disaster at all for stocks. But if the new administration's spending plans are not offset with spending cuts, then we're going to see the budget surge even higher than it is today, and that's going to force bondholders to demand more in yields to compensate for a surge in the supply of bonds. Remember, Janet, or whoever is Treasury Secretary, is going to have to bring even more bonds to the market to fund the deficit if it keeps rising. Well, to fund it even now. And that's going to cause bond prices to fall and yields to rise, right? It's a simple supply-demand economics equation. Higher yields is the way the bond market imposes fiscal discipline on the government. I would not be surprised to see us testing KISS, the 5% level, at some point that we did a couple of months ago. And if we do, then I'm going to also expect stocks to begin to struggle at that point. On the other hand, on Thursday, we heard JJ tell us that the Fed was comfortable cutting rates by another 25 basis points while promising nothing about the future, reminding us that the Fed remains data dependent. But on Friday, we heard from Neely Kashkari, right, Minneapolis Fed president. He's a non-voting member of the Fed, and he told us that the stronger economy could mean fewer rate cuts. But that did not seem to cause any anxiety just yet. His argument, though, is very clear. A stronger economy and higher productivity growth may drive the Fed to cut interest rates less than previously expected, right? We're expecting 200 plus basis points in cuts because the economic policies that are coming from the Trump administration and the new Congress may just stoke inflation again. Now, let's be clear. It's too early to tell, but if it does, it could lead to fewer rate reductions. And in fact, we could see rates actually rise if that's what happens. So the sense is that for now, the Fed is in this wait and see mode. And will remain there until they see what policies actually materialize and what that means to the bottom line. So what about the dollar? Well, the dollar's had a significant rally. It's up 5% off the September low, right? When the currency market started to price in a Trump win. It is now above all three trend lines at 105.33, and it's about to test a June high at 106. The stronger dollar has put pressure on commodities, right? The BCOM, which is the Bloomberg Commodity Index, is now down 4.7% in that same time frame, and any dollar push higher is going to put more pressure on commodities. Recall the inverse relationship between commodities and the dollar, right? A stronger dollar should equal weaker commodities. A weaker dollar should equal stronger commodity prices, right? Weaker commodity prices, though, are also going to be good for inflation, right? So there is this silver lining. So we got a stronger dollar, commodity prices come in, that should help inflation. The move in the dollar can also be seen in the move in gold. Gold is down 4.7% just in the past week, right after the GOP win. But you say, okay, but gold rallied during the month of October when the dollar was also rallying. How did that happen? Well, that's true, because gold is also seen as a safe haven asset. So when there is angst around the world, right, think global unrest, we're going to see investors flock to gold no matter what the dollar does, right? Something that happened really all year because gold is up significantly, right? But when the angst subsides, then that gold dollar trade adjusts, which is what it seems to be doing. Right? The Trump win is seen as a positive for all of the global unrest, as he has promised to end both wars, in Ukraine and Russia, as well as in the Mideast. The move lower, right, down 4.5%, took gold right down to test trendline support at 26.65 before bouncing and closing at 26.94 on Friday afternoon. This morning, gold is down $25, once again testing that trend line where it seems to want to stabilize, but really that depends on what happens on the global stage. So we'll see that continue to play out. Oil is also under pressure. Think the stronger dollar and supposed weakening demand. Oil is once again trading below all three trend lines, down at 69.17. It's down 1.7% overnight. Over the weekend, oil traders had a chance to assess the latest Chinese stimulus measures, and they are disappointed, right? Suggesting that they don't think these measures are going to increase Chinese demand for energy and oil at all. In addition, recall that Trump wants to drill, baby, drill, and that's also putting pressure on oil as it suggests more future supply, and that should help lower energy prices. That will also help cool inflation. Think lower transportation costs, lower utility costs, all factor into inflation. This morning, futures are trading higher yet again. Dow futures up 170, S&P's up 17, the Nasdaq's up 50, the Russell's up 32 points. Now, I would be careful if you're an investor chasing names up here, right? I'd give it a chance. I'd give it a little bit of chance to wait because it's rallied so significantly. If you're getting in, I would say just go easy. If you're already in, then you're celebrating. And if you want to add to your positions, just be patient, right? And if you want to take money off the table, be sure to hit the sell button as the markets are going higher. European markets are all higher this morning as well, up between 0.8 with the UK and 1.25% in Italy. It's all a data-packed week, so lots to consider there, right? Investors in Europe are going to analyze German inflation, Eurozone industrial production, Eurozone GDP, and UK GDP, in addition to U.S. inflation reads. Bank of England Governor Bailey and ECB President Christine Lagarde are also due to speak this week on Thursday. The S&P closed at 59.95, up 22 points. And if futures are any indication, we're going to pierce 6,000 on the opening and test Friday's high at 6,012. There is no economic data today, right? It's Veterans Day, so the bond market and the banks are all closed. So don't expect a lot of action in the equity markets. CPI and PPI are due on Wednesday and Thursday, right? The latest inflation reads, along with mortgage apps, real hourly and weekly earnings year over year, retail sales, industrial production, and capacity utilization kind of round out the eco data. We're also going to hear from Fed Governor Chrissy Waller on Tuesday and Fed Chair J.J. Powell on Thursday, and I'm sure there's going to be a couple others sprinkled in there as the week goes on. Right? You get any questions, you give me a call. I'm happy to help you discuss creating a plan that's going to serve you well, or just reach out to me on Twitter and hit me up and say you want to talk. Happy to call you back. Okay. So what do we have for dinner tonight? Well, this is really about Thanksgiving, right? It's the roasted turkey. And if you're having Thanksgiving this year at your house, then maybe you want to try this turkey. For this, you need the turkey. You need carrot, celery, onions, butter, salt, and pepper. You need an apple. You need an orange. You need minced garlic, sage, rosemary, and thyme. You need chicken broth, and you need a splash of champagne. Now, begin by rinsing and draining the defrosted turkey. Never cook a frozen turkey. Be sure to take the turkey out of your freezer on Tuesday and then let it sit to defrost, right? By Wednesday night, you should be good to go, right? Make sure that you remove the bag that's in the middle that's got the goblets and the neck in it. Take that out of the cavity. You want to rinse the whole thing out, let it dry, pat it down with a paper towel. Now, on Wednesday night, after you've done all that, you want to prepare it and let it marinate overnight. So you want to mix all of your seasonings together, right? All the seasonings I just listed, mix those all together, then set them aside. You want to place the turkey now in a roasting pan, one that you're going to be able to put from the fridge right into the oven. Next, you're going to take some softened butter and you're going to massage the turkey all over the breast, the legs, the thighs. Now, after you do that, you're going to take the seasoning, sprinkle it on, and then rub the seasonings into the turkey, making sure that you cover all parts of the turkey. Then you're going to cover it with foil and put it back and leave it in the fridge overnight. Thursday morning, you're going to go down there, you're going to take it out of the fridge, you're going to let it come up to room temperature. You're going to cut up the apple, the orange into slices, you're going to put all that in the cavity, you're going to rough chop the veggies and place that all around the turkey. You can also stick some in the cavity. You're going to add the chicken broth and a splash of your favorite champagne. Don't ask why, it's just champagne. Just enjoy it. Just put a splash. Don't drown it, just a splash. Preheat the oven to 400 degrees. Now, tent the turkey with foil, right? When the oven is ready, then you're going to place the turkey in the middle rack and let it roast for 30 minutes or so. Then you're going to reduce the heat down to 3 1/4 and let it cook for 12 to 15 minutes per pound. So figure it out. If you got a 10-pound turkey, that equals anywhere from 120 to 155 minutes, which is like 2 to 3 hours. Now, when it's done, remove the foil and allow it then to put it back in the oven, allow it to crisp up and turn golden brown on the skin. Once that's done, remove it from the oven and just let it rest for 15 minutes before you cut it, but keep it tented while it's just resting so it stays nice and warm. And then you go cut it, right? Cut the white meat, the dark meat, put it in a platter, and then you're going to surround it with all the vegetables. We're going to get to the vegetables later on in the week because I make a range of Italian-style vegetables that goes with the turkey. In any event, it is a glorious day here in New York. It's November 5th, and it's about 60 degrees. It's actually November 11th, excuse me, and it's about 60 degrees out this morning, and it's going to be kind of that way all day. So unseasonably warm, but it is what it is. Coming to you live from the New York Stock Exchange, I am Kenny Polcari. Until tomorrow, take good care.